And when you see a major bank like TD Bank shorting silver in a market this tight, it tells me one thing. It tells me they're trapped. In this paper, our emerging markets bond team values gold by matching central bank money liabilities to gold reserves, implying a $39,000 to $184,000 per ounce price target for gold.
Banks are refusing to send bank wires for payment of purchases by their banking clients to precious metals dealers. What have you heard on this?
Was that it's a lot easier to put your money in a bank than to get it out. And people should remember that. Well, I mean, I like to try and kind of make it easy then again. I think, first of all, I just try to strip the noise away. What we're watching in gold and silver, to me, if I could break it down easy, it just seems to me the ending of a paper-based pricing system that's colliding with a form of physical reality. And I can't see how this ends quietly. You can see also what's happening when people seem to think that these banks have unlimited power. And if you've been in this game long enough, it feels that way. And when you see a major bank like TD Bank shorting silver in a market this tight, it tells me one thing. It tells me they're trapped and in a system that ultimately is making them pretend that supply exists when it really doesn't, because TD Bank put on a trade, a big short trade. And that short trade, in fact, it's very silly to short something that's backward dated like this is. In other words, you're shorting something and the traders are paying a premium to have it right now. To me, and something that was just classified a critical mineral, the only reason you'd be stupid enough to do that is because you have to. And the funny thing about it is that they sent out a report saying we think silver's going to like 45, and they just recently got stopped out at 92. In other words, they had stop losses put in place.
This is a massive revelation. A major institution like TD Bank betting against silver and getting crushed proves that the manipulation game is failing. They are being forced to cover their shorts. If you want to uncover the truth behind these market moves that the mainstream media hides, make sure to like this video and subscribe to our channel right now.
To get them out if it went the other way, and they lost a good amount, I don't know, a couple $100 million or something. I don't know what they lost, but that's not the point. The point is that they sent out a letter saying they thought it was going the other way. They got stopped out. This was forced buying, and this is how accidents start, because you're stupid as hell to short something naked in a market that is in backwardation. And I think that, you look at what we've seen along the way, how these banks that are somewhat trapped are trying to change things to get the price back down, but they can't do it again. Even when they dump paper in the dead of night, when liquidity is the lowest and the price goes down, we see physical stress going back up. And in other words, every time it goes down, the physical's being bought. December was the largest delivery in the history of the COMEX market for the month of December. Somewhere in the neighborhood of like 68 million ounces of silver were delivered. That's not bearish. Anything to say the least for the people who saying that the top is in. And I think when you talk about all these people, the talking heads that tell you that the top is in, like TD Bank or the Jim Cramers, the part that these people miss is that even as the paper price fell, the lease rates exploded higher. To me, that's the tell. And when it costs more to borrow real silver, the market is screaming, we don't have enough metal. These lease rates are normally 1/4 or 0.5%, not 8 or 9%.
Don't let the paper price fool you. The exploding lease rates are the market's way of screaming shortage. When it costs nearly 9% just to borrow real metal, it means the physical supply is drying up fast and the vault doors are closing.
When you put backwardation in, that seals the deal to me. That means don't promise me silver next month. I want it right now. And that only happens when trust breaks. And for all of the people out there who are being told that this is the top, this is just like 2011. 2011 was leverage and speculation, right? And you had traders that were speculating with leverage, and when they raised the margins, they all got kneecapped. Here they raised the margin the day after Christmas by 30%, and it doesn't do anything but just a little speed bump as the big money comes in and buys the most, or stands for delivery, the most that's ever been delivered in the history of the COMEX market since 1974. So it's not working. These people don't trade on margin. These big sovereign wealth funds and, governments and Teslas and Samsungs. And today is not about leverage and speculation. That's the speed bump. Today is structural shortages across the world, a declining mine supply 6th year in a row, exploding industrial demand. We see that everywhere, especially with AI and photovoltaic and all the way down through military and everything else that we've covered copiously. But it's the sovereign and the industrial buyers competing for the same metal where, it's now critical. And I think that's something to me where, the people who analyze the markets and tell you, like your financial advisor, and, this isn't a trade. This is infrastructure. And I think you don't permanently top when supply is shrinking and demand is growing. And I think the same thing is true with gold. And again, this is kind of my overview, because I hear a lot of people saying, am I going to lose now? Should I sell? Should I take some off the table? Central banks don't buy gold because they're emotional, first and foremost. They're not catching the trend. They buy it because it's nobody's liability. Gold didn't overtake the euro because it's shiny. As far as I'm concerned, gold is doing what it's doing by default because there is no replacement for trust, period. And I think that's what it comes down to. And when you see interest costs exceeding defense spending, you can see that the system has chosen its path with it, which is debasing, printing, inflating, whatever the hell you want to call it. But this is why central banks are buying gold. This is why silver is being drained. And this is why the paper promises are BS, and they're starting to show up as such. And now let's just talk about a few other things. Going back to the financial advisors, I hear this a lot lately. You need to sell. They're looking at the charts, they're looking at the ratios, they're looking at the headlines, the ETFs. They don't look at the deliveries, they don't look at the lease rates, they don't look at backwardation, they don't look at who's shipping the metal out and who's buying it in, where is it going. By the time this system admits stress, the positioning opportunity is already long gone. So I don't know. I just wanted to say that. Let me see. Do I have anything else here? TD I talked about. Oh, there was an interesting report written by VanEck. Did you see that? Financial Advisory. They said if the dollar loses reserve status. Now, what have I been saying? I've been saying it is my belief that they want to soft default on the reserve status. It's what they want to do. They want to no longer be the world reserve currency over time in order to bring back manufacturing. Triffin's dilemma says you cannot do it if you are the world reserve currency. Vice President Vance has written about it, talked about it. Jared Bernstein, the knucklehead from the chief economic advisor from the Biden administration, wrote a report, Dethrone King Dollar. It is very much well known, if you retain world reserve status, you will never have a trade surplus. And I think that's where they're going. We've talked a lot about that. I mean, I've gone over it copiously on many podcasts, but VanEck comes out and says if the dollar loses reserve status, gold could surpass $39,000. And it says, what if gold replaced the U.S. dollar as a reserve standard? In this paper, our emerging markets bond team values gold by matching central bank money liabilities to gold reserves, implying a $39,000 to $184,000 per ounce price target for gold. And if they were to divide central bank MO, which is the most immediate form of money in the system, they come up with $39,000. If they use M2, it's $184,000. So anyways, the bottom line is you got a mainstream financial advisory saying, well, what if?
Did you catch those numbers? $184,000 per ounce. This isn't a conspiracy theory. This is a major financial firm calculating the true value of gold if it backs the money supply. It shows just how worthless the printed dollar has truly become.
What does that mean? I don't know. When people hear that it's James Rickards doing it, that goes in one ear and out the other, and out the other. I wonder what they'll say when VanEck is doing it. Just a couple other things. Let's see. I don't think I have anything else. How about questions, Dunnigan? What can I do to answer the questions that were submitted?
Well, let's maybe first talk about the note that we've got from about 4 different clients in the past week, and it was broadcast by another dealer online as well as by another independent channel, saying that banks are refusing to send bank wires for payment of purchases by their banking clients to precious metals dealers. What have you heard on this? And I've got some specific examples that I can bring to the table. But and it's not new. We've heard of, you and I have alerted people to the struggles that they've had to sometimes overcome. Some people, maybe a few percent of clients, have had to overcome with their banks in the past. But this is a different story we're hearing now. Not just one bank or 2 banks saying, "Are you sure? Have you checked out this dealer?" But we have a new banking policy that we're not going to send wires to any precious metals dealers. What have you heard about that, if anything?
I have not heard that. I would like you to enlighten me. I saw Taylor. She's great. I saw her, I don't know if it was a short video or whatnot, but saying that caught my attention. Certainly, I've had issues like you kind of illuminated there. Never a flat-out policy, never someone saying, we won't do it. I mean, the first thing I would do is I would say, you know what? Give me all my money and goodbye. I'm never coming back. The second thing I'd say is I'm going to tell everyone what a crap bank you are, anyone that will listen. I haven't heard that. Have you heard this now other than from Taylor?
I've not heard directly of the policy announcement. That was also shared from a client who watched the video by Taylor that you mentioned. What I have heard from multiple clients in the past week is that they or a friend of theirs were told by their bank that they were not going to send a bank wire. We've had a purchase, significant size purchase about a month ago, where my client had to tell her bank, look, we can either make this a partial withdrawal or we can make this a complete withdrawal, as you've just highlighted there, as far as no longer doing business with that bank. And they backpedaled to the point of saying, well, we're still not going to send a wire, but we'll give you a cashier's check, but we're not going to send a wire.
Look, if you're in the lobby of the bank and they say that to you, you got to run as fast as you can. You need to remember whose money that is. Now, people don't realize that when they deposit money in the bank, in essence, they're not depositing anything. They're making an unsecured loan to a bank where you are an unsecured general creditor to the bank. In other words, they take that money and retain 10% of it according to the way the laws are. And I think that the reserve requirements have been whittled down to, I don't know if they ever came back. They were nothing. But they're giving that money, lending it out in things that are returning some income, whether it be short-term treasuries or even parking it at the Fed. But that money isn't there, and it's not yours really any longer the way that most people think it is. Banking is not the way it used to be, but I will tell you, if a bank ever said that to me, I wouldn't even stop. I would say, give me a cashier's check for every penny I have right now. And I'd turn around and walk out, and I don't care what kind of aggravation that would cause me later on. But I think that that's unbelievable, quite frankly. Now, I'll tell you flat out that I had something similar when Miles Franklin was banking with BMO Harris, Bank of Montreal Harris. They had a change in policy at some point. Pissed me off to no end, by the way, because not only did they say we're closing all of your business accounts, you didn't do anything wrong, we just are not working with precious metals companies anymore. This was 15 years ago, maybe. Not quite. No, probably more like, maybe 12, 13. But they closed all of my personal accounts, including those of my wife and children. I had 3 accounts for my kids that, they were very young at the time they closed them. And with no explanation. And they said very clearly, you didn't do anything wrong, it's just bank policy. And so I understand that banks will make these types of decisions, but I moved on, and I would strongly suggest people move on if they have that kind of problem. I mean, we know the old saying, fool me once, shame on you, fool me twice, shame on me. And I wouldn't stick around to find out what they're going to do next time.
We've also heard that the largest sale that Miles Franklin made a few years ago, $50 million, that there was quite a laborious blockade or series of blockades that the client had to do to get that wire out. Can you remind people of that situation?
Yeah, well, I mean, it's interesting because we've done a few of that size. The second one came from a brokerage, no problem at all. But this one, the lady, and this is why she wanted us to tell the public about it, was that it took 4 days and threats, and having the bank was in another state. She had to drive to another state in order to go into the lobby of the bank. The first day she was there, which would have been day 3, they tried to bring her into a room and tell her she was going to get ripped off and don't do it. And finally, she had to threaten that I'm going to pull every...
This is financial censorship in action. When banks refuse to wire your own money to buy real assets, they are admitting the system is insolvent. They are terrified of capital flight. As Andy warns, having your wealth inside the banking system is now a major risk.
Penny I have, and go to the banking authorities, to whichever, I'll go to the Department of Commerce or whatever, and they release the money. But her message to the public was, and through me, was that it's a lot easier to put your money in a bank than to get it out. And people should remember that. But I will say emphatically, if you are ever told that you can't send your money anywhere that you want, and you are certain that you're doing it in good faith, and you've done your diligence, and you know where it's going, and they don't let you, pull every penny you have and go find a new banking relationship, because they're supposed to be there to serve you, not tell you what you can and cannot do. And that just goes to show, I guess, where we are at this stage of the game, at least as it pertains to banking and privacy, and why pretty soon everything's going to be part of the Genius Act. By January 1, everything's going to be different. There will be no more wires. There will be no more checks. It will be transferring money, in essence, instantly via a blockchain network backed by stablecoins. Now, the interesting thing is, will you be able to do it yourself like you can with Venmo or Zelle? So you don't have to go into the bank, and I would think probably you could. It still has to route through, I'm assuming, some sort of a gatekeeper, but maybe not. Point of it is that they don't deserve your business, period. Or your money or your patronage or whatever you want to call it. I'd get out of there as fast as could be.
The other topic we wanted to move on to was the phenomenon of a number of AI-generated account channels that are all suddenly sprouting up. Since middle of October, it's been like numerous channels, and they're spitting out AI-generated content that to the undiscriminating eye looks real, looks like a real human's talking, but it isn't a human. And sometimes it looks like a specific real human, looks like, for example, Warren Buffett, or it looks like sometimes it just looks like a random individual. But the facts are kind of sprinkled in there like grains of truth, and then there's a big story that's spun around this. But the common thread, the common narrative, and this sparked in my mind a few moments ago when you were talking about the reality of bullion banks being caught on the wrong side of trade and desperately needing to try to find their way out, is that the common thread across all of these is that they come up with some narrative that says why smart people would be selling their silver right now. On October 18th, there was this one. something terrible will happen to gold, Warren Buffett's last warning. And that was where it was not even Warren Buffett. It was an AI deep fake pretending to be Warren Buffett, saying that it's all going to come crashing down around you, and the government has evil plans so those who are wise would get out. Then, 4 weeks ago, we had silver added to the seizure authorized. That was from the Asian guy. Seizure authorized because of the green economy. The government deciding that silver is critical material now, and governments all around the world. So therefore, because critical materials can be seized, you'd be prudent to get out of silver and into gold, and make sure you don't be the last one holding the silver. And that's this one right here. And then 2 weeks ago, we had secret critical thresholds were breached in the COMEX, and that means all these bullion banks are going to have to start cascading and selling all their stuff. So you might want to get out of the way before they do. And then just last week, Samsung is selling all their silver and going into graphene. So that means that the floor is going to come out underneath this industrial demand that's been the big part of the accumulation narrative. So you got to get out of your silver quick before Samsung does. Notice a common thread here. Any comments from you on, if you look at, cui bono, who benefits from such a message, other than just somebody who wants to get a name for themselves and get their 15 minutes of fame by talking and getting a lot of attention? But it seems to be a very consistent message at pushing uninformed people in one direction.
Well, I would argue that the Asian guy, the original one, most of his message has been incredibly bullish, and some of it rather intriguing, and some of it mirroring the stuff that we've talked about, that Bill Holter's talked about. A lot of good information mixed with some stuff that was misinformation. This is the first guy that came out. I think, and you could look at that as someone wanting to get the information out about the manipulation, about the rehypothecation, about the inequities we see.
We're entering an era of digital warfare against gold and silver owners. These AI deepfakes and coordinated narratives aren't random. They are designed to scare you out of your position just before the market explodes. Trust physical reality, not algorithms.
In the marketplace. And of course, then there is obviously the ability to do the same thing on the other side, saying, no, you need to sell it. I've seen, Kevin O'Leary, and it's not Kevin O'Leary when you watch it, when you hear him say certain things, it's not him. And like you said, Warren Buffett, there is pushback. So I do think that the first guy, and I think I watched a video he did last night, and he said his real name, I think he goes by Johnny something, but his real identity, he lives in New York, he's in the business, in the finance beat. He said who he was and where he's from, didn't say his name, but the point of it is that there is someone real behind the AI, the Asian guy, the real one. Now there's so many sites that have popped up around it, it's hard to tell. The only other thing that comes to my mind is that, we have 100,000 subscribers now on our YouTube channel, and if you end up getting a check every month from YouTube. And that's why I've done maybe 6,000 videos since 2019, but there's 50,000 out there with my face on it, because a lot of people will do just this. They'll monetize their own channels by putting up a thumbnail of maybe it being on your show. They don't show you, they just show me, and they show their own images and their own words and their own background, and with some outlandish title like Schectman says, gold's going to go to the moon now, and then people click on it. They do it to monetize their channel. Maybe there's some of that in there. I don't know. But what I do know is that I think if there is any truth in what the Asian guy has said, well, I think it's just as probable that the other AI channels that pop up pushing the opposite narrative would be just as easy to do as he did to combat it. The one thing that I will say is that the information he's coming up with is rather intriguing. Some of it's supporting theses that I've had for a long time. I guess we'll see. If indeed what he said, the Asian guy said, that was the most compelling was HSBC being forced to cover their shorts by the end of the month, and Morgan Stanley and JP Morgan exiting positions by the end of the month. So he's only got about, less than 2 weeks left to see if he's right or accurate. But I don't know. And, I think it's so much that people are starting to just delete all of their exposure to the AI guy because you don't know what to believe. And maybe there's a lesson to be learned there that human interaction is always going to be more authentic than not. And I guess you don't know what to believe anymore. But just as bearish as some of the stuff that you cite, telling people it's time to sell, it's overvalued, levels have been breached, blah blah blah. You could argue what the Asian guy is saying, primarily the original one, because there's a couple of them now. The original one, and I don't even know the name of his channel, but what he's saying is very bullish. So who to believe, what to believe, listen to us, and we'll tell you where to go. And I am indeed not AI, and nor are you. So, at least we have either the stupidity or the courage to show our face and our names and to do the best we can to be honest with people. I don't know that you can ever say that about someone who's hiding behind AI, no matter how valuable you think the information is. And I, be honest, a lot of what the Asian guy said, I think is fantastic. Some of it I've proven myself to be false, but that doesn't matter. I think in general, the original Asian guy, I think a lot of what he said is very intriguing, and time will tell if he's right. So same would go for the opposite side.
Next topic we wanted to hit on was the reports. This actually was broken by, as far as I know, Bix Weir last week early, saying that, hey folks, did you know that as silver has skyrocketed from 30s into the 90s, that the U.S. Mint is still selling boxed American silver proof eagles in a velvet box with a certificate for $95. And I had a client call up and tell me about that. I went there. By golly, they were. That's exactly what it said. You could put up to 99 of them in a cart. And but then it's a little disclaimer when you went to check out. It said the buyer assumes all risk of loss during shipping. If there's any loss, theft, or damage during shipping, you take it up with the shipping company. At the U.S. Mint doesn't guarantee that or insure against that. Then we heard lots of stories over the weekend that the U.S. Mint had suspended all sales of U.S. Eagles to the public, and then looks like they did some repricing, some cleanup on their website, and they came out, and what was $95 is now $173 for proof American Silver Eagles. But the point that's been brought up by several people is the other one next to it, this so-called uncirculated coin for $169 per eagle. And the stories have been coming out all over the internet saying the U.S. Mint has repriced silver to $170, or U.S. Silver Eagles to $170.